Cast is now starting. All attendees are in listen-only mode.
All right, welcome guys. We'll get started. Okay, so great to have you guys joining us in this episode. Okay, so by now I think you guys will be aware that every week, every Monday, same timing over here, we do run this indicator series where every week we'll come in to introduce to you one technical indicators and to share with you how you can actually use it to analyze the market and of course use it to develop your own trading strategy as well. Okay, so over here today we're gonna focus on this particular indicator called the RSI. Okay, in the full name here is called Relative Strength Index. Okay, and over here I think if you are kind of like a bit of experience, you have been trading market for some time, you definitely would have come across this indicator. Okay, but of course if today you're very new, okay, no worries on that. I'll share with you how to actually use this to analyze the market and of course trade it. Okay, but quickly I think over here wanted to do a very quick introduction, especially for those of you who are first time with us in this kind of webinar. Okay, I think it's important that you at least know who I am. Okay, my name is Kar Yong. So I started trading back in 2012 and of course today I'm full-time trading investing both in the Forex market as well as in the US stock market. Okay, both trading investing. And since 2015 to now, I've been doing a lot of various sharing. Okay, of course, before the lockdown, a lot of it is the physical events, right? So you can see over here across various cities in Southeast Asia. Okay, and over here, I think it's also fairly important to share with you some of the results that I have based on my own trading, both in FX and the stock market, right? I believe it's important because over here, I always emphasize that whatever I share, I want it to be as practical as I can. Okay, and it's not just some theory stuff that you can find, on like websites or YouTube videos. Okay, I think that's very important. Okay, so this is my 2019 FX portfolio result. Again, very transparent over here. You're not going to be like always winning. Okay, so you can see in 2019 they are losing months. This is 2020 as well. Okay, rather tough. Okay, you can see there are also some losing months. But overall, last year was still profitable as a whole. Okay, and this is over here. You can see this is my stock portfolio. Okay, I forgot to update this year result. Okay, but nonetheless, FX this year I'm making about like up by about 3% to date. Okay, for the past 2 months, January and Feb. And this is the stock market in 2020. This last year about 36%. This year so far I'm up about 7+% on the stock market. Okay, forgot to include that into the slides. Okay, but that's really just to show you that whatever I'm doing, okay, is really based on practical. And in today's sharing, I want to try my best, of course, to share with you based on my experience trading the market. Okay, so for those of you who are actually interested to connect with me further, feel free to connect with me on social media platforms like Facebook and Instagram. Okay, I do quite actively on these two websites, okay, or two platforms. Okay, but do make sure that you are aware of the official account because recently there are quite a bit of like fake accounts and things like that. So make sure you just search for my full name, okay, both of it, okay, to kind of like ensure that that's the proper account. All right, so that's a very quick one about me. Just want to make sure that since you're here today, at least you know who I am. Okay, so today's objective by the end of this sharing, okay, number one, of course, you'll be a little bit more aware, or I would say you'll be familiar with the Relative Strength Index, RSI in short, the different ways you can actually use it. Okay, this is where some of you, perhaps if you've come across it before, you might have just know the RSI on maybe how to use it one way. So today I'll share with you the different methods, okay, and of course how you can use the methods to analyze and eventually turn it into a potential trading strategy. Okay, so let's start off with what is RSI. Okay, so a very quick introduction so that you understand what this indicator does. What does it help you when you're actually applying it? Okay, so RSI actually stands for Relative Strength Index. It's developed by this person called J. Wells Wilder. Okay, but of course, whoever developed it obviously doesn't need to go and memorize it, right? But the important part is you need to know what is the strength of it. What is this indicator being used? Okay, so RSI is often used by traders to kind of evaluate and analyze whether right now the market is it having a strong momentum. Okay, so in other words, the strength of the current market direction. Okay, so it's actually a momentum indicator, right? As the name suggests, strength index. But what it can also help us to identify is the overbought and oversold condition. Okay, in short, what does this mean is that if today everyone wants to buy, has already entered the market and bought in, okay, and the market right now has nobody interested to buy, okay, what it means is then this market is overbought. Everyone who wants to get in has already gotten in, okay, which means that very high possibility what you will see is a reversal, right? And vice versa, of course, if it's an oversold condition, means the market has been selling. Everyone who wants to sell has already entered. Then naturally, there's a higher possibility that it will reverse. Okay, so that's the idea between overbought and oversold conditions in the market. Okay, and in terms of RSI, of course, later I'll show you in the chart. You probably can understand all these things way better. Okay, but for now, it's just a little bit on all these technicalities. Okay, so RSI here, if you put it into your chart, it ranges from 0 to 100. So 0 is like the minimum and 100 is the highest. Okay, and by default, okay, this one here, different traders might customize it a little bit. Okay, but by default, if you just use it based on whatever platform you have, you insert this RSI indicator. The default setting here is that if it's 30 or below, it's the oversold condition. Okay, and just now we explained that, right? It means that there's a higher chance that it's going to reverse. And of course, if it's above 70, then it's the overbought, which also means that there's a higher chance price is likely going to be reversing. Now, some traders like to kind of customize these levels. Okay, so instead of like 30, they like to lower it to 20 and lower. Okay, 20 and below, so that's the oversold. And they change the 70 to 80. Okay, to me, it's not too particular. There's no such thing as which one is the best. It really all boils back down to which one do you feel aligned with. To me, a lot of all these technical indicators, as long as you use it by the default setting, okay, and you understand the pros and cons of each indicator, you are fine. Okay, you do not really need to kind of like customize it too much. Okay, so for me, I do use the RSI as well. I'll show you as we progress in this webinar. Later, we'll go into some live charts to share with you how it's being done. But for me, I usually just keep it to the standard setting, right? Nothing too fancy about it. Okay, so very quickly over here, this is a very typical RSI standard default. Okay, that's how it looks like. On top of it, you're gonna see your price chart at the bottom. That's where your indicator is gonna go. Okay, and over here, what you can see is that let me put the color. Okay, you can see this is TradingView charting platform. Okay, but if you're using MT4 or MT5, you have the RSI as well. Maybe the visual looks slightly different, but the concepts are the same. Okay, so you can see over here, you have these two dotted lines. Okay, so basically this is your 70 mark, and of course, this is the 30 mark. Okay, so everything that's above here is basically overbought, and everything below here, that's the oversold condition. Okay, so basically you can see, as long as it's a gray in color, you are in neutral kind of territory. Okay, and if it enters into like the white zone, then that's where you have the extreme. Okay, either is it going to be overbought or oversold, right? So that's the idea behind it. Okay, so I hope that's clear. Okay, now with that quick understanding of what exactly is RSI, what's Relative Strength Index, next part here is let's move into how you can use it to analyze the chart. Okay, and there are a few methods that we're going to talk about. Okay, but I'll share with you the most common method first. Okay, and then we're going to progress together towards a little bit more complex method. of how we can use it to trade. Okay, so the most common way, of course, is to identify the momentum. Okay, as the name suggests, it's a relative strength, right? So we want to understand, based on RSI, what is the current momentum? Is it strong or is it weak? Okay, so again, it doesn't really tell you the direction immediately, but the first thing you want to understand is whether the momentum is strong or weak. Okay, so over here, we're going to utilize another key level, which is the neutral 50 level. Okay, because the highest is 100, the lowest is 0. So somewhere in the middle, that's 50. Okay, when the RSI, so we're going to add a 50 middle line, right? And then when the RSI actually starts to go above 50, okay, that's indicating that the momentum to the upside is strong. And of course, vice versa, if the RSI is dropping below 50, then that's actually a falling trend, right? The momentum is to the downside. Okay, so one of the most common way to use RSI is actually this methodology to help you identify whether you want to focus on, the upside, because if the momentum is to the upside, you focus on the upside, right? Look for buy. And if the momentum is to the downside, then you look for the sell. Okay, and of course, if it starts to cross above 50 and it keeps going up, and at one point in time, it goes into an overbought condition, okay, or if it starts coming down and goes into the oversold condition, then you want to be a little bit more cautious, because it's telling you that be prepared that there will be a potential reversal. Okay, so that's what it means if you're looking at RSI alone, right? Just itself as an indicator. Okay, so over here, let me show you some charts so that you can reference to what we talk about, right? So over here, you can see before this, okay, of course, you can't only just look at the indicator without the price and then just trade with the indicator. Cannot. Okay, you need to also understand a little bit on like the price chart, whether it's in an uptrend, downtrend, etc. Okay, now let's assume that this is where the downtrend ended, and you can see it starts to go high, and then it forms a higher low, okay, and then it forms a higher high, okay, and at this point of time, okay, while it's consolidating, going into correction, what do you see? RSI starts to come back down, and it starts to form a consolidation too, okay, and after that, you realize that, okay, price chart here has a higher high, higher low. It's technically in an uptrend, so you would like to focus on buy, okay, because the price chart tells you it's an uptrend. You want to focus on the buy, okay, and then from here you realize that, okay, price in terms of RSI starts to cross above the 50, which tells you that after this higher high, higher low, okay, and after this correction consolidation, the momentum RSI indicator tells me that, oh, it's starting to go up already, okay? And that's the part where perhaps you can start to look out for a breakout trade, okay? But we'll go into that later, but I want you to see, okay, with RSI now, I know the momentum has eventually picked back up, okay? And that's where it starts to see price starts to go higher. Okay, so don't worry about the trading aspect first, but right now understand how this is being applied. Okay, I think that's important. Now, on the other side, okay, as price keeps climbing, and of course you can see your RSI also keeps climbing. Okay, and this is where it enters above the 70 mark. Okay, sometimes traders use 80, right? As I say, right? So if it's 80, it's also above. Right? So that's where you can see that's the overbought condition, which means everyone who wants to buy has likely gone into the trade. And usually when that happens, you can see, right, price is actually stalling because the momentum has reached its peak, is at extreme, very high chance, it will take a pause or even a potential reversal. Okay, and that's the part where you can consider, like, either you want to take some partial profits off, take the profit off the table, or you want to consider, okay, is it time to look out for a potential reversal trade? Okay, so this is what the RSI can tell you. Okay, don't worry about how we're gonna trade it first, but right now understand how to utilize and what this RSI indicator is telling you. Okay, we'll talk about what are some of the strategies later on. Okay, so that's how it is. And of course, over here you can see as this continue just goes sideways, Eventually, of course, there's two chances here where price starts to break out of the 50. Okay, and you can see price starts to go back up from there. Okay, vice versa, I'll give you another example on the opposite direction as well. Okay, so same thing over here. You can see that from this high, price has been making lower low, lower high. So technically you are in the downtrend, right? And when price starts to consolidate over here, you can see that RSI starts to crosses below the 50, which tells you that momentum is starting to build out to the downside. And that's where you can, of course, from here see how price starts to fall. Okay, and over here you can also see every time it goes into the oversold condition, okay, price starts to kind of like do a mini sideways move, right? Over here as well, it does a mini correction, and this here eventually is a potential reversal. Okay, again, doesn't mean that if it's overbought, then like oversold you buy or overbought you sell. No, okay, you don't do that. But what it's telling you that if it's at the extreme, you just want to be cautious. Likely price is gonna stall or is gonna do a reversal. Okay, so usually if you are looking at the RSI to help you in your analysis, when it's at extreme overbought and oversold, and if you have a trade running in profit, it's a good time for you to maybe start taking partial profits, right? Okay, or even exit the trade because of a potential reversal, right? That's the idea of it. Okay, so that's a quick one on how you can understand momentum, okay, using the RSI indicator. Okay, now from there, we'll start to build in a potential strategy that you can use, okay? And one of the most common strategy that traders use, including myself, to incorporate the RSI indicator is what we call divergence trading, okay? Of course, over here, some traders uses different indicators to trade divergence as well, okay? So like the MACD, the stochastic, okay? You can use those indicators to trade divergence. Okay, but for me, I'll just use the RSI. More or less, they are about the same. Okay, so the concept of divergence over here, you need to understand there are typically two types. Okay, one is what we call regular divergence. That's to spot a trend reversal. And we have the hidden divergence, which is to identify a trend continuation potential. Okay, so I'll walk you through these two types of divergence. Okay, but I would say that regular divergence are usually easier to be identified, and hidden divergence are usually a bit more challenging to be identified unless you are very, very familiar with technical charts. Okay, but using RSI to spot for divergence will be able to help you in either trend following, where you trade the trend continuation method, or you trade the potential trend reversal. Okay, so let's talk about regular divergence first. Okay, now why can we use the RSI indicator to actually spot and trade divergence? Is because the RSI itself is a momentum indicator, right? And the idea of divergence over here is that we are identifying a lack of momentum. Okay, and that's where the potential reversal comes in, right? Because there's no more momentum, eventually it will turn. So over here, regular divergence, okay, sometimes you might hear traders just say divergence, okay, because it's regular divergence, we usually just take away the word regular, okay. So in terms of the regular divergence, okay, what it means is that price and RSI is moving in opposite direction, okay, and that's where the name comes in. It's diverging, okay, one is going in one direction, the other is going in the opposite. Okay, so as I indicate just now, this is usually a potential reversal. Now let me show you on a chart what I mean by that so it becomes super clear. Okay, so first off, of course, you reference it to the price. Okay, so over here you can see that price is actually making a higher high. Okay, making a new high, right? But take a look at the momentum indicator, which is RSI over here, right? You can see this high, which is from here, okay, and this high, which is from here. You do see that it's sloping down. Okay, so RSI, your momentum is telling you that it's making a lower high, but price here is making a high high, which means that this, right, basically what it means to you is that while price is going up, the momentum is not building, right? The momentum is like lacking. So it tells you that potentially there's gonna be a reversal because the momentum is not there. Okay, so this is how regular divergence look like. Okay, price goes up, your RSI actually comes down a little bit. Okay, now I'll give you another one. Okay, of course, this one here is just to show you that it breaks down, right? So from here, that's where price starts to reverse. Okay, so the strategy later, once you understand this principle, the strategy later is very easy. Okay, I'll walk you through a little bit when we go into a live chart. Okay, but over here, I want to give you another example on opposite side. Okay, so just now we look at price going up, right? So over here, you can see price is coming down. Okay, price makes a lower low. Okay, but your RSI here is actually making a higher low. Okay, so you can see when you use lines to draw in, okay, it's very obvious that the directions are different. Okay, and that's where you spot a regular divergence. Okay, and of course over here this chart you can see again price actually reversed to the upside. Okay, so this is where you spot a divergence and there's a high potential that is going to be reversed. Okay, of course these two examples here I'm showing you is example that reverse perfectly. Okay, so that's regular. Okay, later we'll go into the chart to see some of the actual market right now in the live market environment to apply this principle. Okay, so I think regular divergence shouldn't be difficult. To me, okay, based on like my experience of sharing and teaching traders on this, usually regular divergence is fairly easy to identify, right? You might just need a little bit of practice and then that's it. You can spot them quite easy. Okay, but hidden divergence is a little bit more challenging for most people. Okay, so most of the time, traders would focus on regular divergence first, and then once they're familiar with it, then they start to apply hidden divergence. Okay, depends on you, right? Also, again, depends on your experience in the technical charts. So, hidden divergence here is usually we use it to identify trend continuation. Okay, so if we want to follow the trend and we want to trade after a potential correction, okay, that's where we want to see, is there a potential hidden divergence? Okay, this is very similar to regular divergence. It's just that, you know, it's slight different. Okay, so let me show you the chart and see if you can really spot that difference between the regular and the hidden. Okay, so if you take a look at this, right, they are also diverging. Okay, that means price and the indicator, they are moving in different direction. Okay, but you can see over here, this one, price makes a lower low. Okay, but your RSI actually makes a higher high. Okay, and that's a divergence. Okay, but this is called a hidden divergence. Okay, if you just take a look at this, okay, this one here, okay, this is your regular divergence. Okay, so I think you can see that very huge difference, right? This here is going up, but RSI is coming down. This here is coming down, but RSI is going up. Okay, so this portion, okay, this one A is your regular. This one here is your hidden. Okay, so in this same chart, you actually have both. Okay, now let me walk you through the concept and the principle of a hidden divergence, right? And why is it a trend continuation pattern? Okay, so first off, you can see, of course, this is very obvious. You have a lower low, lower high, right? So it's a downtrend. And then from here, price starts to correct and retraces a little bit. Okay, when it reaches this point over here, you can see that your RSI is actually overbought. Okay, it's in an extreme condition. Okay, but at this point in price, you are actually having a lower low. Okay, so you are lower low from this, right? So technically, this entire structure is due to downside. But at this point here, you already have an extreme, which means that likely the momentum is going to reverse and go back down. So likely from here is going to continue to the downside. Okay, so that's why you can see it's a trend continuation, because when this retraces up, it didn't really break this high, but your RSI is telling you that potentially it's already going to reverse. Okay, so that's where the trend continuation setup comes in. Okay, so this is what we call hidden divergence. Okay, and of course from there you can see the trend continue downside, right? Give you another example. Okay, so same thing, you have a higher high, okay, higher low. So technically this is in an uptrend, right? And when price retraces down here, you can see your RSI actually has a divergence, okay? And this one here, again, you can see it's at the extreme. When this correction comes in, this is already at the extreme. So likely this is going to reverse to the upside, and from there, price continue in the previous direction. So that's the uptrend, okay? So you can see why hidden divergence is actually trend continuation pattern, okay? And the trend continue upside. Okay, so again, I understand that hidden divergence is not that easy. Later, when we go into a live chart, I will see if there is any example, and then show it to you. Okay, and let's see, you'll be able to identify them as well. Okay, but before we go into a live chart, just wanted to do a very quick summary. Okay, again, it's not very complex in terms of what RSI is. Basically, it means relative strength index is used to identify momentum, right? And we talk about two main ways to look at it, right? Whether is it overbought, oversold, and the divergence, right? So that's the two main methods. So the idea, again, if I were to make it into a very layman way of understanding this indicator, it helps you to know whether the current trend is healthy or not. Okay, because if it's at the extreme zone, like maybe above 70 or below 30, when you're overbought or oversold, that's not healthy. Okay, and that's where it usually needs to kind of reset or do a correction. Okay, understand that? And of course, we also look at divergence. Okay, and we have two, right? Regular and hidden. So RSI itself is actually very, very useful and very good indicator, because you can actually use it for trend reversal. You can also use it for trend continuation. Okay, and this is only based on like one indicator. Okay, and I always share with traders that you don't really need a lot of indicator, right? You just need to find maybe one or two that you are aligned with, right? Something that you like. You feel that that indicator, I like using it, I can connect with it, then that's the indicator that you just want to stick with it. Okay, so let me go over to the charts to kind of walk you through the indicators, right? And just show you some live examples of how it's being done. Over here, I'm using TradingView, okay, but as I mentioned, okay, any platforms you have that indicator called RSI, okay. So over here, I'm just going to be using the TradingView platform. Usually it's easier for me to draw and just play around with it, right? Good. Okay, so over here, I'm just going to change this to like maybe 80 and 20 to make it a little bit easier, or I would say filter a little bit. Okay, to see if, okay, this doesn't help, right? Let me go back to 70-30, so I think we can spot more opportunities. Okay, so that's the default setting. Okay, now again, common questions that many traders would have is that, like, what instruments can you use this on? What time frame is it best used on? Doesn't matter, okay, because again, we are looking at technical. Anything that has a chart on it, any time frame will do. Okay, don't worry about that. Okay, so over here, I'm just gonna use like euro dollar first as an example. Okay, so again, let's start with daily time frame. Okay, now first off, over here, you can't just look at the indicator and ignore price. You can't trade like that, right? It doesn't make sense. Okay, you need to look at price at the same time. Look at the indicator. Okay, so over here, okay, I want you to see that while price is going up, okay, can you see over here, this is like a higher high, right? But immediately, if you take a look at your RSI, what do you spot? You actually can very quickly spot a divergence. Okay, while price is going up, okay, you do realize that over here, the RSI is actually forming a lower low. Okay, now when that happened, okay, what does it tell you, right? It tells you that there's a very high chance that there's a reversal that is potentially happening. Okay, either reversal or let's say a pause of it. Okay, and you do see that right now, maybe, okay, this is where the start of the reversal is coming in. Okay, so that's where if you are looking to buy or you're buying in the past, okay, and you see a divergence over here based on RSI, okay, that's telling you be cautious. Maybe you want to start taking profits and look for a reversal. Okay, So that's the idea of it. Okay, so that's the divergence. Okay, and this is just new, right? It's just recently. Okay, of course, what we can do is we can scroll back in the past and kind of like spot for some of the different reversal and divergence. Okay, so again, very quickly, I want you to be able to practice that as on your own as well. Okay, so again, you can see these are what we call regular divergence, right? Price is making a new low, but your RSI over here is actually making a new high. Okay, so you can see after price comes down, this is where the reversal happened. Okay, so that's again what we call regular divergence. Okay, yeah. And of course, if you just scroll through back and practice along the way, you'll be able to find kind of like divergences on charts almost fairly easy. Okay, so again, you can see over here, price goes up. This one here is coming down, a divergence, and then what happened? Price does a reset, right? A break. Okay, so if you're actually buying this uptrend, okay, when you see a divergence here, maybe it's good to take profit. Okay, look out for another opportunity after that. Okay, same thing over here. Okay, can you see the divergence, right? So your price actually went lower, but your RSI actually made a higher low. Okay, and same thing after that, this is a total reversal. Okay, so you can see that, right? Just by scrolling through one chart, easily you can spot that. Okay, but let's take a look at if you can spot some regular hidden divergence. Okay, maybe on the daily it's not there. Okay, let me see if we can find it. Okay, in fact, over here, Euro dollar 4-hour time frame. Okay, I'm not sure you can really see it, but can you see that price is actually making a lower high? Okay, but in terms of your RSI over here, okay, you can see it's making a higher high. Okay, so that itself is what we call a hidden divergence. Oops, okay, this is what we call hidden divergence, right? So it's a trend following strategy, okay, because you can see this is a lower low, lower high, right? It's a downtrend, and then when it comes back up over here, technically this is still a lower low, okay, and that's the opportunity to sell it, okay? So of course this didn't really keep going down, but over here, if you can capitalize on that, that is still pretty good. All right, so that's a quick one. First hidden divergence that perhaps we spotted. Okay, let's take a look at see if we have any others. Okay, it's not really it doesn't appear very frequent in the charts. Okay, that's something that you need to be aware of as well, right? So it's like not the easiest to spot, but at the same time you don't see the hidden divergence happening a lot. Okay, maybe let's go to like lower time frame and see if we can spot them. Okay, okay, let's see if we have any here. Okay, nothing. Okay, maybe this yep, this one here, right? Can you see this, right? Lower low. This one here is diverging, right? So this is again hidden divergence, right? You can see price is coming down. It's a downtrend, and then when it comes back up here, it's at the extreme overbought. Okay, and therefore there's a potential reversal, and overall it's still going down. That's a downtrend. Okay, so that's how you can utilize it. Okay, but of course these are all like looking back in the past, right? So that's how we practice. That's how I show you some example. Okay, but moving forward, let's say if you are trading it. Okay, the easiest way to actually identify first is to spot for a regular divergence, because that's where you want to see, okay, potentially that's a reversing sign, right? Okay, if I bring you to like the pound dollar, right, this is on 1-hour time frame. Okay, you can see that we are establishing a divergence right now. Very obvious, right? Okay, price is actually going up, and your RSI here is coming down. Okay, so what it tells me is that at least on the 1-hour time frame, there's a high chance that this will reverse to the downside. Okay, and from there, that's where you can wait and look to have a trade set up for you. Okay, of course, there are many ways, many strategies that you can develop from here. Okay, but today we just take it to one of the simplest method. We call it the breakout. Okay, and the idea is, of course, this is the recent low over here, and then what you look out for is if price break this low, that's your entry. Okay, very simple strategy. Okay, which means if price break this low, that's where you get involved in the sell over here. Okay, and ideally your RSI, again, you can utilize the 50 mark. Okay, that's where when it breaks below this, your RSI should start to crosses below that 50. If you remember, we talked about that, right? That's where your momentum starts to build up, and ideally it shouldn't go towards like 20 or 30 too fast. Okay, so by the time it reaches 30 and then price is maybe somewhere around here, that is potentially your time to exit the market, take some partial profits, or even exit it and take profit from it. Okay, and that's the idea of it. Okay, that's how you utilize RSI. Now, if let's say it starts to come back up, okay, and let's say it bounces back up and then it comes here, okay, so let's say you have a lower low, lower high, and from here you start to see, okay, that's a regular divergence, for example, then you know, this is the opportunity to keep selling it again. Okay, so of course now it hasn't happened yet, but what we see over here is just a regular divergence. Okay, so I hope you can see that. Okay, let me see if we can look at some, if I can find like some hidden divergence. Okay, it's usually not easy and it's not common to kind of like identify it. Okay, again, all these are regular divergence, what you see over here. Okay, very obvious. Okay, that's like the easiest to spot. Okay, regular divergence is always easier to spot. Okay, this one here again, you can see. Okay, it's a regular divergence. Over here again, this is a regular divergence. Okay, can see that, right? Okay, so potential reversal. That's what is happening right now. Okay, this also you can see. Okay, regular divergence, so a potential reversal to the upside. Okay, now once you acquire this ability to use RSI to kind of identify your divergence, okay, you actually can spot quite a bit of opportunities in the market. Okay, a lot of it are trending right now, so there's not much of a hidden divergence that I can spot. At least for right now, right? I want to focus on what's happening right now and see if I can find anything for you guys. Really nothing much. Yeah. Okay, there's not much of a regular, a lot of regular divergence. Okay, not much of a hidden. Wait, let me go back to just now. Okay, good. This is on gold. Okay, I'm not sure if you guys see it, right? Again, I say it's not that easy. I almost missed this as well. Okay, but I want you to just reference like this high, okay, and this high. Okay, it's definitely in the downtrend, right? You can see that. Okay, at least from a 1 hour time frame, you have a lower low, lower high, and I want you to compare this high and this high. Okay, it's actually coming down, but take a look at your RSI. This is actually going up. Okay, so this is what we call hidden divergence. Okay, and what it means is that very high chance from here, there's a potential that this will continue to fall, and that's where your trend continuation is taking place. Okay, and of course, over here you can see this is already at an overbought territory, right? So this is on gold XAU, right? So for those of you who are interested to kind of like keep a watch on this, this is XAU on a 1 hour time frame. This is where we talk about the hidden divergence. Okay, yeah, so that's on gold. Okay, so same thing. Again, this is playing out very nice. You can see this oil, right? WTI, regular divergence, a reversal. Okay, so that's what you can utilize on. Okay, even on like indices or even like I would say like, let me go over to Bitcoin. Okay, recently very popular, right? Okay, so same thing. You can apply on any charts. Okay, if you take a look at Bitcoin over here, wow. Today or yesterday, it kind of like broke the close to 57, 58,000. okay, you look at RSI, it's already at an extreme, right? So you can see most of the time it reset a little bit. Okay, same thing over here. You can see this is the extreme, it reset a little bit. Okay, so RSI will be able to help you on that as well. Okay, so what is a good buying opportunity? Maybe you want to wait for RSI to drop towards the extreme. Okay, that's maybe the time for you to keep a close watch onto it. Or what you can do is maybe you start to see there is some form of like hidden divergence for trend continuation to the upside, or while this is starting to drop, okay, you can potentially spot a regular divergence for reversal to the upside. Okay, so that's something you can also look at it, right? Of course, on the daily time frame, you can already see that we have a very huge divergence on the daily. Okay, so it suggests that you want to be cautious of buying because the potential here is a reversal. Okay, so you can utilize your RSI indicator to kind of like either identify opportunities or kind of like use it to help you take profit, right? Because when it's potentially reversing soon, if you're buying somewhere around like, don't know, at the bottom over here or even here, okay, then if you spot the divergence happening at this top, then maybe it's a good time to take some partial profits off the table. Okay, so I hope so far has been clear. Okay, it's pretty much a very straightforward indicator. Okay, there's no need for you to really overcomplicate it. I think the important aspect here is that you want to understand the usage of it. Okay, why we use it that way, because it's a momentum indicator. Okay, and I identify opportunities that, or I would say more like you can use it to identify opportunities to trade, or you can use it to identify areas that you want to be a bit more cautious or even take profits. Okay, so I really hope today's sharing over here helps. Okay, so that's all that I've prepared to share with you. I think I hope it's clear enough. Okay, but at the same time, I want to open up some time for you to ask questions, or maybe there are certain parts that you're not familiar with, you'd like to clarify. Okay, I would like to give you some time to do that. Okay, so right now, if you have any questions, you want to clarify on, or I don't know, anything that you're not familiar with, or you have doubts on, something not clear, do drop it in the question or chat. Okay, just type it in. Okay, I'll be able to see it, and from there I'll be able to kind of like answer any questions that you guys have. Okay, we're gonna give it like I'll give you like maybe about 2 minutes or 3 minutes to type that in. Okay, and if there's questions, then I'll address them. Okay, so if you have questions, now is the time to put that in, right? Okay, so Calvin here has a question. The RSI period is using standard 14 or any other period is good. Okay, so for me, I'm actually using 14. Okay, for now over here, I think it's 7 or 14. Okay, so sometime I like to change it just to 7. Okay, the idea of this here is okay, good question. Okay, the length or the period, right, is basically just how many historical data you want to use for the whole calculation of this indicator. Okay, so if your period or your length is like larger number, like 14, okay, then what you realize that this RSI indicator will be a little bit smoother. Okay, because it takes into account more data. If I change this to 7, which is less, right, it's a shorter period, then the indicator will be a little bit more responsive to the chart. Okay, to me, it's not much of a big difference, right? So I just show you what I mean, right? Let me put 2 RSI, then you see it very clear. Okay, let me drop in another RSI. Okay, so the top one over here is a period of 7. Okay, the bottom one, I'm gonna just put it 14, right? So you can see there's a difference, right? There's obviously a slight difference. But because we are using the RSI to kind of identify divergences, right? You can see both of it has divergence, okay? It's just that, of course, the magnitude of it is slightly different, okay? So to me, it's not much of a great deal. I think, whether you want to use it 14, use it 7, not much of a diff. Okay, honestly, you take a look at it, it's more or less similar. Okay, there's again no like which one is better, right? It's a matter of preference, right? So to me is I only use this two, 7 or 14. Okay, I never really go and play around like if what happens if this one changed to like 34, right? I never really do that. So for me, the recommendation to you is you either leave it as default, which is usually 14 period, okay, or you can change it to like 7, drop it down to 7. Okay, so that's something you can decide whether you want to do it or not. Good. Okay, good question from Kevin. Any of you have questions that you want to clarify? Okay, another question from Kevin as well. Will a longer period of maybe 21 or 28 be a better indicator, but that will be slower, right? Yes, your understanding is correct on that, in a way that if you increase your period, okay, let's say we change this to like 28, okay, what it means is that it will take more historical data for it to do its calculation, right? And that usually means it's smoother, right? So you can see over here your RSI. Okay, let me bring it back to like 7, right? Okay, you can see there's a lot more oscillation, right? Up and down, up and down, up and down when the period is 7. But when I change this to a bigger number, okay, you can see there's less oscillation. It's going up smoother, coming down a little bit, going up, going down. Okay. In all technical indicators that has a period setting to it, the larger your setting of the period, okay, the larger the number of the period is, the smoother the indicator is going to be. There will be less signal. Okay, there will be less, like over here you can see less overbought and oversold, right? But it also means that it's likely going to be lagging because you need to take into account more data. Okay, so if you're looking at RSI, usually we don't go beyond 14. Okay, there are some indicators that you want it to be a little bit long in terms of the period. Like for example, if you're using moving day, EMA or SMA, right, moving averages, usually you want to play around with the length, the period. Okay, but for RSI, usually we just keep it to 14 or even 7. Okay, because you do not want to have taking into account too many data, because by the time you see it, maybe it's already lagging. Okay, so that's something you want to take note of. Yeah, good. Okay, so my recommendation on RSI is very straightforward. You either keep it at 14, which is good enough, or if you want to, be a little bit more you want to see the RSI a bit more responsive to the current price, drop it down to like 7 period. Okay, this is the only two numbers that I think is important. And of course, you can play around with your overbought, oversold condition, right? So let's say if I want to play around with 7, over here I can change to like 80 or 20 as well. Okay, so some traders does that to kind of like filter out a little bit, right? Because if you put 70, fairly easy, right? Quite easy that the RSI will hit 70. Okay, but if you put like 80 and 20, then you will actually filter out all those that hit 70, and you only take into account if, let's say, the RSI really goes like 80 and beyond, right? So it becomes really, really extreme. Right? So that's something you want to consider as well. For me, I usually change that to 80 and 20, but again, it's just a minor difference. Okay, it's not gonna be like, oh, if you put like 70, you're gonna lose a lot of trades, and then if you put 80, you're gonna win a lot of trades. That's not gonna happen. Okay, it's just a minor difference. More or less, they are the same. Okay, so I hope that's clear. Good. Any other questions that you guys have? All good? Okay, if all is good, okay, let me do a very quick check as to next week what we are talking about. I totally forgot on the topic. Okay, but basically we're running this series here every Monday. Okay, for English every Monday. For some of you perhaps who like to kind of like listen it and maybe you understand better in Chinese and Mandarin, we do that on Thursday, right? So same thing, right? So this Thursday we're gonna have a Mandarin session talking about RSI. Okay, so I'm gonna use Chinese and Mandarin to present that. Then next week, okay, I think next week will be very interesting for some of you as well. We're gonna talk about Ichimoku. Okay, one of the more complex technical indicators that you're gonna see in your platform, right? Ichimoku. Okay, there are a lot of things going on in Ichimoku. There's a cloud. There's the 3 different lines. Okay, so next Monday, okay, if you're keen in understanding that, join us. Okay, on the 1st of March, which is a Monday, same timing at 9 p.m. We're gonna talk about that. Okay, so yeah, that's all from me today. Really hope that you actually pick up something from today's sharing. Okay, I think that's very important. As long as I'm able to benefit you, that I achieve my objective, right? Good. Okay, so that's all for me over here. So wishing you guys all the best to your trading journey. Okay, and for those of you who are interested to keep on learning the various indicators, I'll see you guys on Monday, okay, 1st of March at 9 p.m. Right, so good. Thanks, Kevin. Okay, see you guys next week. Bye bye.